Learning how to invest long term can be an extremely daunting experience for newcomers. So today I'm going to share with you 3 key tips that I use and that are critical for your success if you are investing long term. How's it going, guys? Ryan here with another video today, and today I'm sharing with you one of the things I'm most passionate about and my favorite form of investing, and that is long-term investing. And I'm going to share with you 3 key tips that I use and which are absolutely critical for your success if you are investing long term. But before we get started, guys, as always, if you haven't done already, please subscribe to the channel so you get more of this awesome content. Like the video if you did enjoy it, and leave any comments, questions or queries in the comments section below. So without further ado, let's get straight into it. So my 3 key tips for long-term investing, and they are crucial to your success. And the first of which is something a lot of people don't talk about, but it is important. It is extremely important to be patient. And patience is something that is an extremely hard skill to develop, especially when you're dealing with your own personal finances and money, because there is always that risk there. And you find with lots of new investors, there's so much going on, there's so much information that they're taking in that they make quite quick and quite irrational decisions. But if you are investing in the long term, patience is critical, because often what you'll be doing is buying shares which will be fluctuating in price for months, years, or even multiple years. So you want to effectively have patience, and it's something that you're not going to be able to just naturally go in and do. It's something that will be learned. And what you'll effectively see is that if you're impatient and you're buying and selling shares constantly, that doesn't necessarily equate to success with your strategy. If your strategy is to invest in something long term, buying and selling consistently isn't necessarily going to net you the best result. And when you're very new, it's hard to pick the highs and the lows of the share price fluctuations. So if you're in and out and you're not patient and just sit on the share, then you could potentially hurt yourself in the short term and effectively screw yourself over in the long term by potentially missing out on that one big run that does occur for a lot of stocks. Or you might just end up selling your shares at the bottom of a trough, and then the price spikes and you want to get back in and you're at a worse position than you were beforehand. So patience is absolutely critical. And when it comes to long-term investing, the only way you're going to get multiple bags is through having patience. So please keep that at the front of your mind when you are going to make a decision with regards to the stocks you currently hold. If you're thinking of selling something that you were investing in long term, just sit back, think about it for a second. Don't make any irrational decisions and be patient. That is the most important thing out there. Now, number 2, and this is something I talk about all the time, and it is extremely important when you're investing in any company. Doesn't matter if you found out about it on social media, a company announcement, heard about it from someone you know in the industry. You need to do research and make sure it's your own research, because people can post absolutely anything online, and for all you know, they could be spruiking, pumping, and then causing stocks to dump. You want to be doing your research so that if you are investing long term, you're picking those companies which are genuinely going to be successful. Not all companies are going to be successful. It's just the name of the game. And depending on what sort of industry and what side of the market you're going to, so if you're investing in small caps, medium caps, large caps, you still need to do that research. When you're looking at the small caps, it's a lot riskier. So it's still important in the large to medium caps, but in small caps, if you're investing there, or even micro caps, it is extremely dangerous if you don't know what you're getting yourself into. So effectively what you want to do is first go look at the financials of the company. Are they in debt? How much money do they have on hand? What's their current cash flow? Understand the flow of money coming into and out of the business now as well as in the future. So for instance, if a company has a debt and it has interest that needs to be paid, when does that interest need to be paid? And does the current cash on hand cover that interest payment? Because if it doesn't, they're either going to have to A, take out another loan to pay for the interest, which is horrible, or B, they're going to have to dilute the shareholding by doing a credit raise. Also bad if you're currently invested, because effectively they're making your shareholding worth less because there's more shares on the market. So you need to be really careful about these sorts of things. Secondly, you also want to look at obviously what the company does. That is very important, but what's their path to success? What have they lined up and how have they performed in relation to achieving the goals that they have set for themselves and the promises they are making the shareholders? This is extremely important, because at the end of the day, if they're not, if the management team is not hitting their goals or the promises they're making, then effectively you don't have much faith in the company itself, and as a result the market won't have faith in them and they'll start selling their shares, so the price is going to inevitably drop. So this is something that is very, very important and critical to your success before you invest in any share. And of course you want to be investing in those shares which are genuinely valuable and which are genuinely going to grow in the long term. Now, coming in at number 3, and this is also important and it kind of entails the other two as well. So this is planning, having a clear strategy in place. So when you enter a stock, you want to know exactly why you're getting into that stock, why you're getting into it at this price. Why do you think the stock is going to go up in value? Where do you see the value going with the current status of the business? And how long do you think it's going to take before your goal is hit? Now, planning is absolutely critical, and typically you'll hear me talking about planning when it comes to short-term trading, because you want to effectively see your entry point, your exit point, and you want to keep very, very rigid plans in place so that you don't deviate. When it comes to long-term investing, planning's a bit different. Because you're in the company for such a long period of time, the story and information that comes out from the company is going to change. And hopefully that information is good information, but potentially it could be bad information. And you want to make sure that your strategy focuses on the reasons you invested in the company in the first place, which are the fundamentals. So for instance, if a company came out and they had the largest gold resource in the world and you're like, wow, that's absolutely fantastic, definitely want to invest in that, and it's got other factors you want to hit. But then let's say you found out the largest gold resource in the world was 1,000 meters underneath the surface, you might want to reevaluate why you've invested in this company, because that is extremely deep and hard to get to, and it's going to cost a lot of money before you see any return. So you really need to understand why you invested as opposed to your general entry and exit points that you have in place. Now, the price is going to fluctuate, so entry and exit points don't tend to matter as much if you're investing long term, because you're looking at the bigger picture as opposed to the daily share price fluctuation. So make sure you have that plan and that strategy in place, but make sure it focuses on the fundamental aspects of the business itself, as opposed to the share price or the technical charts and that sort of thing. Focus on the story of the company effectively. Now, if you don't follow these 3 key things, then your chances of success are likely to be significantly lower because you need to be patient, you need to do your own research, and you need to plan exactly what you want to do. This is critical for success, and you'll see many successful investors have followed these 3 key principles for their own success. Now, I'd love to know from you guys, what other key success factors do you put in your trading plan, your strategy, or whatever it is to be successful investing in the long term? Let me know down in the comments section below, and let me know if you do also use these 3 key tips I've shared with you today. If you enjoyed this video, guys, please remember to like it. It helps me out so much, and please subscribe for more content. I've got absolutely tons of good stuff on here now. I'm upping my uploads, so hopefully you guys can get on board and make sure you hit that bell so you get notified when a new video comes out. And with that one, guys, I hope you have an awesome day. See you next time. Cheers.